Now, I'll focus on the show today. The free fall of the Naira compared to other global currencies has been a major cause of concern for investors. In a recent move, earlier this week, the Central Bank of Nigeria officially changed the exchange rate of the Naira to the dollar from 361 Naira to 379 Naira. The Apex Bank had earlier expressed its decision to unify the exchange rates in the country as forex scarcity persisted, with the Naira being exchanged for about 473 Naira at the parallel market earlier on Friday. Meanwhile, financial experts have continued to clamor for a single exchange rate in the country, calling for a transparent and effective price discovery, which they would believe would also help deepen the market perfections. And joining me now in our Lagos studio, I have economist Hardin Udo to discuss the recent movement in trading pattern of the Naira in the foreign exchange market. Good to have you on the breakfast show today.
Thank you so much, David.
Now, first and foremost, what do you make of the effort by the CBN to unify the rates and then looking at the supposed devaluation of the Naira at this point in time with this new peg?
Oh, well, kudos to them. We've actually been clamoring for this for years now. And seeing that it's actually happening, it's a move in the positive direction. That's on the one hand, David. But beyond that, there's something happening. Devaluation is happening. The CBN is struggling to stabilize the Naira. So while there's so much noise or news around the unification, the truth of the matter is that the devaluation of the Naira is going on hand in hand.
And I'm talking about sustaining the Naira at a level where we don't see just the free fall that we've seen over the years, because it's a quick fix to devalue the Naira, but at the end of the day, the longer impact is costs the nation much more. And so many say, well, the reflection of your currency is just how strong your economy is trading, and Nigeria is not trading strongly if we're going by what the Naira trades today.
Yeah, true. Okay, let's go back a bit. In history, we find out that throughout history, Nigeria is has been a single product economy. The overdependency on crude oil has been our bane when it comes to production. If we go back a little bit in time, we find out each time there's been an oil glut, devaluation comes into play, and we've had that severely over the years. Okay, so this brings us to the management of the current account of the country. You know, as we export products, the government earns foreign currency. And as we actually import stuff, we're spending more money. The primary aim of the central bank has been to defend the position of Nigerian foreign reserves. That is its foreign earnings. And right now, that current account is under pressure. So the play by the central bankers is a play that is well rehearsed in the history of Nigeria's financial economy.
So it's nothing unexpected, but looking at the short term and then medium long term now, with the current uncertainties we have in the global economy at this point in time, do you think we'll see a further devaluation of the Naira?
It's coming. David, it's definitely coming. You know, against the various pockets of foreign currencies, you see that, okay, fine. It's on the one hand, you're trying to unify. If we were just trying to unify the different rates, you'll find out that we should have been playing much more of an average or probably at a mode level, speaking in simplistic terms. But this is way and beyond that. By the time the COVID-19 effects are waning off, the expectation is that our local producers who are heavily dependent on exports will be pressurizing the CBN for forex. And so once that demand goes up, the rates that we're seeing now will definitely shoot up. That's the expectation.
Yes. And any quick fixes?
Well, there are no quick fixes in the short term. Well, all you could do is we have a very young or growing small and medium sector, small and medium enterprise growth base. And the government is trying as much as it can presently to incentivize that group of people. Now, we're heavily dependent on a lot of things, technology, technical know-how, We're heavily dependent on importation of all of these things into the countries. And these things definitely will impact our current account in a negative way. So the more homegrown solutions that we can get will help as a palliative for us in this situation. There are no quick fixes, so it's going to bite hard. In fact, for those companies that are heavily dependent on raw materials from abroad, a lot of them are going to be suing for bankruptcy. Yes, that's just what's going to happen. Yeah, and so we're in for a rough time. We're in for a rough ride. So, David, there are no quick fixes.
Okay. Naira 10-year reopening bond that will mature in January 2026 and be offered at a rate of 12.5%. And also a 40 billion Naira 15-year reopening that would also mature in March 2035 and also be offered at 12.5% as well. It further shows that a 45 billion Naira, that's 25-year reopening bond, will also mature in July 2045 and be offered at a rate of 9.8%, and the longest tenure of a 40 billion Naira 30-year reopening bond to be offered at 12.98%, as well as 207.57 billion Naira for the 12.8% federal government March 2050 bonds. Now, the total subscription received for the July bonds was pegged at 470.13 billion Naira. Our focus on the show today now, the free fall of the Naira compared to other global currencies has been quite a major concern for investors. In a recent move earlier this week, the Central Bank of Nigeria officially changed the exchange rate of the Naira to the dollar from 361 Naira to 379 Naira. The Apex Bank had earlier expressed its decision to unify the exchange rates in the country as forex scarcity persisted, with the Naira being exchanged for as high as 473 Naira at the parallel market earlier on Friday. Meanwhile, financial experts have already continued to clamor for a single exchange rate in the country, calling for a transparent and effective price discovery, which would also help deepen market perfections. Well, joining me now in our Lagos studio, I have economist Arden Udot to discuss the recent movement and trading pattern of the Naira in the foreign exchange market. Good to have you on the breakfast show today.
Thank you so much. It's good to be here.
Now, let's start off with sanitizing the foreign exchange markets, looking at the role of the Bureau de Change operators and also the CBN, and then the, should I say, menace of currency speculators and what their predictions have led to. At this point in time, there were certain valid red flags which are now playing out with the current devaluation of the Naira.
Yeah, well, I think from where we're coming from as a country, David, I think the CBN is already doing a good job trying to rein in the BDCs. They're trying to sanitize that space, so kudos to them. Is there still much work to be done? I'll say yes. You can see how transparent it is when the banks, the CBN doles out foreign currency or exchange to the banks. They come back accounting to the CBN, yeah? They also publish who has purchased what in the national dailies. You know, there's so much room for speculation still, and that's what's going to probably derail the gains of the ongoing devaluation policy of the CBN and also the unification, because as it is now, while we're saying there is scarcity, there's a lot of scarcity that is due to speculation. So back in the some years ago, what the CBN did in conjunction with the police and probably the state security service was to clamp down on speculators, you know, to try and curb the negative effect that scarcity will cause on blooming industries or small and medium scale enterprises. You know, so you cannot curb speculators from what their business is. Their business is to speculate. They want to make a profit, but they want to make a profit to the detriment of not just the economy, but also the citizenry. So the CBN needs to probably sign up again the security operatives that did an excellent job when the Naira went into free fall about 3 or so years ago in 2017, you know, because what we saw speculators do was to herd the dollar hoard the pound. And when it's not available and people want money, the rates keep going up.
And talking about dealing with the forex scarcity that we have looming now, at this point in time where the global economy is already gradually reopening, and then we are also seeing that the fact that airlines are going to start operations once again on an international scale, we have demand from all key sectors, for example, the importers and exporters windows, and a whole lot more. At this point in time, the crunch is a little much, and once the economy is opened fully, it means the pressure is going to be much more. So dealing with the current scarcity now, what should be the strategy plan of the CBN to be able to ensure that we have adequate liquidity?
The only hand I see the CBN playing now is what they're playing, and that's devaluation. You see, their role is to defend the capital account or the foreign reserves of the country, yeah? And they've played it no other way in the past 10, 15 years. It's been historical. And so what I see happening is a further devaluation. It's not as if devaluation is a bad thing per se. We may say that it spells doom to those who are over-dependent on foreign exchange. But as a country, what it does for us is that it makes our products and services more attractive to foreign purchasers. When you're looking at foreign trade and all of that, you're like, oh, cheaper goods here, the quality is right, they're bound to come to the country. And that is also going to help the country to diversify its earning potentials. So we're looking at a country that is a sole product country now in oil, but by the time you're actually devaluing the country, it's forcing the citizenry or the producers to look inwards for solutions for their own products. And because you're having more Naira chasing fewer foreign monies, there's a tendency for someone to say, oh, look, no, the dollar is on the high side now. Can I get a product in-house, that is within Nigeria, that can still serve my needs? So it then boosts local demand. While yes, it's true that there may be a threat of inflation if not properly handled, it's the best way to go. So that's the hand I see the CBN bankers play.
Yeah. Thank you very much for your contribution on the Breakfast Show today, Harden Udo. And looking at the forex market from the global lens, we still see the greenback also struggling to maintain a strong pull, but so far the pound and as well the euro has just tried to keep it steady. Hopefully Nigeria takes a cue from that, and then we see the Naira slowly stabilize as the economy gradually recovers.
Thank you.
Well, let's